So let's talk about money. In particular, let's talk about the stock market and let's talk about Tesla. So ever since the election last Tuesday, and we all know what the outcome of that was, Tesla has been on a tear, okay? It was approximately $250 last week prior to the election, and now as you can see, it's all the way up to $345 in the pre-market. Now, I've been seeing a lot of TikTokers who have been advising people to invest in Tesla. And while I don't think that that is a bad idea, I think that just jumping into Tesla without really knowing what you're jumping into right now may not be the best financial decision. Now, keep in mind, I am not a financial advisor. I can just share with you guys my thoughts on Tesla and what I do. And that is precisely why I'm going to give you my insights on Tesla right now in this current market. I've been investing in the market long before the past week's election results, right? And so I happen to have several shares of Tesla leading into last Tuesday's results. So I woke up Wednesday morning very, very perturbed about the results and the outcome of the election, but very, very excited about the results on my portfolio, on Tesla in particular. All right, you guys, so it is Monday morning, and of course it is time for a traffic chat, but look, there's no traffic this morning. I think it's because a lot of people work hybrid schedules where they don't have to go to the office on Mondays or Fridays. So typically here in Austin, on Monday and Friday, they give you a little bit of a reprieve from traffic because look at this. Normally it is bumper to bumper. But anyway, I want to talk to you guys about the stock market, right? I want to talk to you guys about what's been happening in the market as a result of President-elect Trump. Because I've been seeing a lot of videos on TikTok where people are doling out financial advice where it's not financial advice, and so I'm going to follow in that same vein and just issue this disclaimer. I am not a financial advisor, so I'm going to tell you guys mostly what I do. So I'm not giving you financial advice, I'm just telling you what I do, okay? Now keep in mind, even before the election happened, I've been investing. If you watch any of my old videos, you'll see that I talk a lot about investing. It's just something that I've gotten into and I see the benefits of. Is another way for you to create generational wealth or poverty, okay, if you're not careful, okay? So let's be clear about that. So, on the night of the election last Tuesday, right, of course, I wanted Kamala to win. That didn't happen. I woke up the next morning. I was pretty sad about the fact that she didn't win, but then I opened up my portfolios. I have one on E-Trades, one on Fidelity, one on Robinhood, one on Webull. So I have like 4 or 5 different portfolios, right? And in most of those portfolios, I have Tesla stock, right? Because a couple months ago, or about it, maybe six or 7 months ago, they had an earnings report where they missed their earnings, right? And because they missed the earnings, the stock was on a sharp decline. Now, knowing Tesla stock, I knew, that this was going to be temporary. So I started to do what's called dollar cost averaging. That's buy a couple of stocks here, a couple of stocks there, because there's no real way to determine where the bottom is when a stock is dropping. There's no real way to determine where the top is when a stock is on its ascending. So dollar cost averaging is a way for you to make sure that you're not putting in too much too early or too little too late, if that makes sense. So I started buying Tesla stock because it dropped all the way down to like $199, somewhere around there. And through dollar cost averaging, my average price for the Tesla stock was about $227 per share. And so I just decided to buy it and just hold long term, which is what I did. So I had no idea when I bought the Tesla stock 6 months ago that Elon Musk was going to insert himself into the election process, right? He was going to insert himself into the Democratic process, but he did. And as a result of that, if you've been watching Tesla stock over the last week since the election, it has been on a tear. And when I tell you a tear, I'm talking a tear, right? It has been seeing increases of, 10%, 5%, 6% on a daily basis, right? So on Friday, holding over the weekend is always the scariest part for me, right? Because you never know what Monday morning is going to bring. Monday morning can bring you bliss or it can bring you the blues, depending on what's happening with that stock over the weekend. That's one of the reasons why if I'm going to invest in a more volatile stock like Tesla, I prefer to do so through Robinhood. And the reason I like Robinhood more than the other investment platforms is because you can do after hours trading, okay? So when the market closes at 3, if something happens in the market, like there's earnings that happen quarterly, you can still make those trades in the aftermarket on Robinhood, whereas on E-Trades, I'm not able to do that. On Fidelity, I'm not able to do that. So I really appreciate Robinhood for that particular reason. So as I was saying, I sold my stock on Friday, right? And when I sold my stock on Friday, I believe it was like $220. I sold it at like $224. I woke up this morning and this girl was up to like $246. Okay? Now, I'm not mad that I missed out on that little bit of money, right? Because it could have very easily went the other way. And one of the reasons that I'm not mad is because Tesla has been on this tear. And this is what I feel like a lot of people who are giving investment advice are not telling potential investors. The safeguards that you need to operate within to make sure that you're not going to lose your shirt in this nonsense, or to make sure that I'm not going to lose my shirt. Because again, I'm not giving you a financial advice. I'm just telling you what I do. The first thing I want to do is I go and I look at those moving averages. And if you don't know what moving averages are, then you shouldn't be investing. Okay? If you don't know what moving averages are, then you should not be investing. If you don't know who Jerome Powell is, you shouldn't be investing. Okay? If you do not know who Jerome Powell is, then you shouldn't be investing. This is my financial advice to me, okay? And the reason I say that is because between Jerome Powell and those moving those moving averages, they can have a huge impact on the outcome of your portfolio. So when I looked at Tesla, I see that Tesla is operating way above its moving averages. The 50, the 20, and I believe the 200-day moving averages are the ones that they allow you to see on Robinhood. And so Tesla is way above these moving averages. And these moving averages really act like a floor, right? When Tesla begins to fall, they're going to catch it, right? And for every moving average there's a dollar amount associated with it. Because I believe when I looked at Tesla, the moving average for the 200-day moving average was $274, somewhere around there. And so that tells me that if Tesla starts to fall, there's a potential for it to go from $346 all the way down to $274, wherever the moving average was, the 200-day moving average. And a lot of people who are jumping in think, oh, it's going up, but as Newton famously said, what goes up must come down. Now, unless you know about options trading, calls and puts, which gives you an opportunity to make money if the stock is going up and if it's coming down, this may not be the best time. Well, this may not be the best time for me to invest, because I'm giving myself financial advice. This may not be the best time for me to invest, because buying stock right now, I feel like would be a very risky move, especially if you're buying Tesla, because at some point there's a gap fill that Tesla is going to have to fill because of that big jump that it made the morning after the election. And you don't want to get caught in that. Or I don't want to get caught in that. So I made my money. I'm satisfied with what I made. And right now, I'm going to hold on to my money. I'm going to sit off to the sidelines. And I'm just going to watch. And what I'm waiting for is for Tesla to come back down to maybe around 280, 290. And when I see it hit the 290 mark again, that's when I'm going to start dollar cost averaging. If I see it not approaching the 290 mark, then I know that it may be a good time for me to go ahead and start buying some. But at some point, because of all the money that Tesla has made over the last week or so, there's going to be profit taking. All of those people who have invested in Tesla stock, who have seen its ascent over the last couple of days, are going to start taking their profit. The whales, as we like to refer to them. The whales are going to start taking profit. And so when they start taking profits, obviously they're selling their stock, and it's going to drive the cost of the stock down. And I don't want to be caught in that, so I'm going to wait. And I'm just going to give the market a time to cool off, a time to level off. You cannot be so eager just because you see something going up, or so naive to believe that it's going to continue going up. I promise you, if you're patient, I promise me, because I can't give you financial advice, I promise me, if I'm patient, that we're going to see a retraction. We're going to see that stock come back down. And then that's when we're going to strike. So I'm just going to be watching Tesla now. I'm not putting money back into Tesla because right now it is just too volatile at